Good afternoon. April Fool's Day is upon us, and I know we are all wishing this pandemic were a big joke. Unfortunately, it is real, and the impact is incredible. Just 3 months ago, U.S. GDP growth, while not spectacular, was solid at 2.1% for the fourth quarter. Job growth was strong, averaging 175,000 over the past 3 months. Inflation was mild, and real rate wages were moving higher, especially for lower income groups. But of course, the coronavirus has changed all that now. Most economists expect a full-blown recession in the second quarter, perhaps extending even further into the year. Last week alone, some 3.2 million people filed for unemployment, and this week's number, unfortunately, could be higher. In response, the Fed cut rates, and Treasury and mortgage interest has dropped sharply. We've almost reached the point, which is now common in Europe, where we're paying the government to hold our money. In fact, the interest rate on 91-day T-bills was in negative territory for the first time in our history. In addition, the Fed announced another round of so-called quantitative easing by purchasing 500 billion Treasury bonds and 200 billion mortgage-backed securities. They also introduced additional liquidity support in the commercial paper market. Finally, last Friday, President Trump signed the $2.2 trillion CARES Act that will put money into workers' pockets and support small businesses. It will probably be a couple of weeks before we'll know how effective these measures will be. At the week's end, the Dow Jones Industrials were up 12.84%, while being down 24% for the year. The S&P 500 was up 10.2%, 21% off for the year. And the NASDAQ Composite ended the week up 9%, down 16.3% for the year. So the stock market's made a strong recovery last week, and in normal times, those gains would have been record-breaking. It is extremely rare when after double-digit gains in a week, we still have double-digit losses for the year. But we are in strange times indeed, and where we're headed is still unclear. In the U.S., we are approaching 150,000 COVID-19 infections and 2,500 deaths this morning. All indicators are that these numbers will continue to climb for weeks. Investors and traders have typically relied on sales figures, revenue, and earnings to feed their valuation models, which help them forecast market direction. But now they're forced to include numbers of viral infections and deaths into the process, making the traditional models even less reliable. We are keeping our eyes and our ears open to all the data so we can help you make the best decisions for your financial future. I am certain this week will be just as interesting as any thus far. While we are working from home, technology is allowing us to continue to serve you as efficiently as ever. We are but a phone call or email away. So please stay safe and healthy, and thank you. Have a great week.